Well, g'day there, traders and friends right around the world. Thanks for joining me on this Wednesday afternoon market recap. Today, all three of the US markets have rallied. The Dow Jones Industrial Average is up close to 300 points on the daily. You can see the S&P closed up just over 40 points, and the Nasdaq closed very, very close to that 100-point level. All three of the daily candlesticks are giving us an inside day Morobozu long day bullish candlestick. You can see that we have essentially a shaved bottom, pretty much a tweezer bottom type of candlestick, if in fact yesterday's candle was a long dark day. Really, the sentiment at this location, at this old resistance level going back to July 2014, August and September, is now acting as new support during the month of December. Yes, the market has retraced, but this is definitely an area where we expect the market to slow down, at least move sideways, before we start to see again a little bit of a short-term bounce in the overall markets. Quite interesting when we start comparing that to our top 13 individual trade list, which is what I'm going to do because I've been hesitant of the downside price action. I have been, again, expecting a short-term bounce in the markets. Today, it appears we are starting to see. Now, before we get into the intraday analysis or the individual trade analysis, you might be asking, why do you have a green perspective box like this on your chart? Why do you have another one down here, or a larger term sort of green box down here? The reason why, and the reason is because I like to trade with Fibonacci support and resistance, or at least regression lines, when of course the opportunity to use them rears its head. At the moment, you can trade using just basic support and resistance lines. What I also like to do is measure the ranges, what the market has done in the past, for instance, where we've sold off to in mid-October to, of course, where we have rallied to at the beginning of December. I like to just find out where those retracement levels are, okay? And this is the levels, or the level which I put on the chart to symbolize, look, the market is healthy technically if we come down and bounce, all right? That's not, of course, including what happens up in this area, whether we set up a new higher high or if, in fact, we set up a lower high. But these are things which we are going to have to work with in the future. But right now, the market is looking healthy, all right? That's what's occurring as at the close on Wednesday afternoon. We do have a very nice bullish bounce across all three of the general markets. We are holding old resistance is new support, and we are holding this perspective box right here, which is based on the Fibonacci support and resistance levels from this most recent range right here. What's interesting to note is that in our top 13 individual trade list, I made this quite clear, is that I was expecting lower structure to form on a lot of stocks. We have seen that occur as at Wednesday. Most importantly, Tesla. I mean, Tesla's been one which we've been capturing since 240. Since the breakdown up here below 215, and most recently we had a 198 bearish entry down here. The thing is that we are at macro support. This is going back to April, May, and June 2014, and we hadn't seen a daily candlestick show up giving us a lower level of structure to bring our bearish entry down below. If you did get whipsawed into this trade, this is a very good learning opportunity for you. It's something which you can grow from, something that you can write down in your trading journal and say to yourself, well, this is what I missed, or this is what I didn't include in my daily analysis or my analysis of this particular stock. You can see how very quickly the technical picture can change on individual stocks. This is representative of Tesla right now. Up until yesterday, it was very, very bearish. We knew we were running down into a very strong support level. What occurred today is that Tesla has gapped down. It's gapped down to about, what was the opening price? $193.06. It has rallied up to $205. It's left us with a very nice bullish engulfing candlestick pattern at the right location. Remember, candlesticks derive their meaning at location. This is the perfect location where you'd expect Tesla to slow down, if not set up an intermediate reversal back into some of these exponential moving averages. This is really the box which I'm looking at. I'm not playing the upward bounce in Tesla. I'm waiting for the next shorting opportunity, which is going to present itself in this particular stock. Twitter today came back down to our ultimate target at $35 a share. Well, it looks as if my battery is about to go on me. I'm going to have to plug this in very, very quickly. There's no real news on Twitter. Starbucks today, again, very similar type of move. We had this very, very low, or position very low between the opening price on Monday and where it is as at Wednesday afternoon. I still like this trade for the downside. It's a little bit different to that of Tesla. I'm going to skip this. If you are in this particular trade, set your stop about $81.30. That's $2 of risk, and we'll see what happens on that Starbucks trade. The same is true with Netflix. We still didn't see that lower structure. Today it has occurred. 321 was the initial entry based on, of course, if the market were to retrace. You can see right now we've seen what we call a one white soldier candlestick pattern. Instead of gapping down, like you can see in Tesla, we actually gapped up and traded up intraday. Very, very interesting move. We are working still against the 3 declining exponential moving averages, so it's too premature to be looking at Netflix in a bullish perspective. We still need some additional information, but you can see how the market is bouncing, the general markets are bouncing, how a lot of these stocks are sort of stabilizing after incredible sell-offs to the downside. Another particular stock which I'm looking at is Halliburton. Halliburton, again, is seeing a little bit of bullish pressure come back into the stock. It's at this pivot point which we expected at least price to slow down short term. A reliable or a very good target on this stock to the upside really comes in about $44 or $43. It really comes into this gap right here. Okay, the gap between these two candlesticks going back to the breakdown which we saw at 47.60 and the first gap over our first target at 45.47. Very nice trade right here. Again, too premature to be trading HAL. Google today, a nice little inside day. The volume's coming back in. It's still there on the bearish side, but again, it's the same type of situation. We have that lower structure right now. So what I can say on Google is that if Google wants to break, I mean literally if Google wants to break below Tuesday's candlestick, I mean I'm shorting this down to $487. We have the inside day. We have what we're looking for. Now it's a matter of time if price wants to confirm how much lower it really wants to go. Facebook today is still holding that primary bullish trend line. You can see here it's still struggling to hold that bullish trend. It looked as if yesterday it was going or potentially looking at breaking down. Very quick snap back to the upside. FAS has given us a very nice morning star reversal candlestick type of pattern. It's not enough to jump in bullish, but having a look at that, or having said that, I've drawn the same type of perspective box on FAS. This is a bullish perspective box. It's a retracement to say, look, if FAS retraces, where can it retrace to? And this is the level we came up to, this green box you can see right here. We've pierced into the green box. Now we're starting to see the first of potential many white candlesticks, which is going to take the price of FAS higher. Disney today, another little inside day. It's really not doing a whole lot in the way of net movement. It's still continuing to move sideways. I'm still pretty skeptical on the price of Disney. I do believe it is going to move lower. CAT today, very, very similar. We had that shooting star candlestick yesterday, or I explained how this is quite bullish at this location. It's not really a sell signal today. The price of Caterpillar tried to sell off. However, it couldn't hold these lower levels, and it's kept us, or it's left us with the second early reversal candlestick pattern. This is what we call the hammer candlestick at support. This just sums up the sentiment taking place on Tuesday. Two very, very bullish signals on Caterpillar. All right, two very, very bullish signals on Caterpillar. Having a look at this, I do expect Caterpillar to increase in value. I do have a very good target up here, about $95 a share. This is going to coincide with the declining exponential moving averages, so please keep an eye on Caterpillar. It's still not really tradable yet. Baidu today is really struggling to hold that 100 simple moving average. It's also still struggling to hold this old resistance as new support. It is technically doing it, I will give it that, but if we see Baidu really break above 234.82, very excited about this on the upside. Having said that, we are technically in on the downside at 222, so just mitigate your risk. Make sure that you drop your stop to just above Tuesday's candlestick. It's only going to leave you with a couple of dollars risk, which is what you need to do as a technical trader to mitigate your risk as much as possible. Amazon at the moment, I'm very neutral in. We got in at 321. This is the weakest out of all of the stocks. We're sort of in no man's land at the moment. And there's a very good chance that we are going to come down and hit 289, so please be patient on this particular trade. It's still looking very, very good. And Apple today had a very nice bullish pop. We're coming down to this old congestion, going back to early November 2014. You can see if I just project this over to the right, this is where the buying pressure is starting to show up. We are still technically holding the 50, even though we are below it. You get these types of moves where it looks as if the 50 is breaking down, but in all reality, it's just where the buyers are starting to show up. You can see right here, we've had two pretty decent bullish candlesticks. We're still above the 100 simple moving average, and the oscillators are very, very oversold. If I can just bring those oscillators up, you can see that this is the location where Apple will tend to move higher. It's not there yet. I do believe we're going to come down and hit the 100. But Apple, the trade's really starting to materialize. So I'd like to just thank you for watching this analysis update. It's my responsibility and duty to update you, especially when you see types of days set up like we've seen in the markets today. Very good learning opportunity for many people to take on board, to not aggressively overtrade the market, and to get a perspective of what the market looks to be doing, and to say to yourself, well, does that agree with these types of trades which I'm looking at placing? So thank you so much again for watching this analysis video. I'll see you all on Thursday afternoon for another market recap. All the best, ladies and gentlemen. Goodbye.